My name is Patrick Zielbauer. It's 3:30 on Wednesday, August 30th. Thank you, everybody, for coming to our event today. I'm going to go through some risk stuff first. If anybody has any questions about risk specifically, please feel free to ask and we'll get it straightened out. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So folks, only fund a futures account with risk capital. That means money that you can afford to risk or lose without lengthening your retirement horizon or affecting the ability for you to pay your bills and maintain your lifestyle. If you're not sure if this is appropriate for you or where you might fall on the risk capital curve, so to speak, please feel free to have a discussion with about that with your representative in our office. Infinity does not sugarcoat risk. And in light of this particular event where we're talking about IRA funds, we want to make special note to really only go this route if you still consider these funds to be risk capital. Some people are very guarded about IRA funds. Other people have a 401k from an old employer that they don't mind rolling over into an IRA and trading in a speculative environment. Everyone's has a different situation. So again, only fund a futures account with risk capital. That idea doesn't change just because it's an IRA account. Okay, it's still risky. All right, so if you have any questions about that, please feel free to ask us. Today we're going to be doing a webinar with Brad from Midland. Midland is an IRA custodian that Infinity has worked with, and our parent company Transact has worked with for a very, very long time. We'll go into a little bit about why we align ourselves, so to speak, in this fashion with Midland once we have Brad come in to do his part of this. But before we go that route, what I first want to cover is the first part of this title here, which is multiple accounts with one click. So let's go into that first, and that'll take us about half the time, and then we'll roll it over. Brad will take the screen. He'll talk about IRA accounts, and I'll also kind of explain why we're tying these two topics together. All right, so let's go ahead and do that. I'm going to bring up my slides here and then go ahead and show the slide from the beginning. So you should just be able to see one giant slide here. It should be nice and big and clear. All right, so if there's any issues there, let me know, but we'll just kind of move into it. So multiple accounts with one click. We've done the disclaimer already. So allocation, master, block accounts, what are these? And this is what we refer to when we're talking about creating a situation where you have the ability to trade more than one account with one click. So why would this be useful for someone who's a regular person or a professional? For a regular person, this is most useful for people who maintain more than one account and want to employ the same strategy in those accounts. As an example, let's say that you have a regular individual account with us and you want to open up an IRA account also. Let's say you've seen some success or you feel like you can turn the corner with your own account and you want to do something with your IRA as well. So you open an account with Midland, roll some funds into it, that money comes to our parent company Transact and we set it up for trading. One of the options you have is to have us create an allocation account where you can trade both of those accounts with one click instead of having to trade them both separately. Another possible example would be someone who's got an account in their name and then they've got, let's say, a joint account with their spouse. Maybe they have an LLC account or a corporate account for some reason, whatever, and it's all here. And they want to be able to trade the same strategy in all of those accounts at the same time. This is a situation where that might be useful. So if you only have two accounts, you could make the argument that, okay, maybe you can run two domes next to each other or the same market, trade them both at the same time. It's really not too bad. But once you get to three, then you could argue that really it can be difficult. And even with two, it can be difficult. So this is a way for you to have for you to be able to avoid the problems that come with trying to manage more than one account at the same time if you're trying to trade the same strategy. Another group who utilizes a system like this would be commodity trading advisors or companies who run automated trading systems. So as an example, if you are a registered CTA and a commodity trading advisor and you're managing client accounts and you have 100 accounts to manage, Are you going to be trading 100 one lots when you put an order in? Probably not, right? It's just not feasible. So what's going to happen is that CTA is going to maintain an allocation account with the broker. And they're going to put a big old 100 lot in when they do a trade. And when the fills come through at the end of the day, all those fills are going to get broken down into the client accounts. So that is, at its core, that is what an allocation account is for. So if you're a person who might have more than one account with us, or you're thinking about opening up a second account, then this is something you may want to consider. Okay. Now, there are lots of questions that usually start roiling around when people start learning about this. And one of those things is, how do the trades get allocated? So regulatory requirements require that once the breakdown is set, you can't change it once you start trading. So what that means is that once the allocation is in place, you can't in the middle of the day say, oh, you know what, I want this account to get both the trades instead of them to get split down the middle. There's obvious reasons why that's the case. Now, if you're trading your account and you're trading another account that you own 100% of, then you're not really playing favorites, but you could see the regulatory reason why this is in place, and it's to prevent favoritism with fills. So once the breakdown is in place and the allocation account has begun to trade, you can't just go in and mess around with the allocation. It's fixed. All right, so if you have an allocation with us, you send that to your representative, your broker in our office, and we're going to confirm with you that it's accurate and it looks good. And then it'll just stay that way unless you make a change. So let's say that you have an allocation where you have two accounts, and then you open up an LLC or an IRA account with us, and now that's your third account. You make sure to talk to your representative in our office to make sure that your allocation is now allocating to all three of those accounts instead of just two. So it's not automatic. So there's a little bit of a manual process in here, but we don't actually charge extra for this service. A lot of our competitors will actually charge a very high per contract fee associated with doing something like this. Sometimes as high as like $1 or $2 a round turn, because there is a manual process that has to go in place whenever things like this are changed or edited, or if there's if an issue of some kind that needs to be resolved. It's a very, very, human resource intensive. So, we have tried to set ourselves apart. We have great technology, and we have a really kind of turnkey solution for this sort of thing where we can offer it without asking for extra fees. Situation might occur where that a higher cost could be justified, but for the majority of the allocations we've done, we haven't had to do that. So you stay in contact with your representative about the allocation, and you establish risk limits and contract limits just like you would a regular account. So let's say you've got account A and account B, and we'll give you an example here in a minute. And then what we're going to do is we're going to create account C. And account C is your allocation. So you're actually not logging into A or B. You're only logging into C. And account C is what's got the daily risk limit, the contract limits, etc. So allocation accounts, like normal accounts, have limits on them, both in the form of a daily risk limit and a maximum contract limit. Okay, any questions on any of this so far? Pretty straightforward? If you do, please feel free to ask. Okay, so if you have a question, please feel free to ask. I'll cover as much as I can in real time. So here's a sample allocation discussion. So let's say we have an allocation account number 12345. And there's three accounts that we wanted to allocate, account A, B, and C. So what we want to make sure of is that every account gets a fill. And so what that means is we need to make sure that whoever's trading account 1, 2, 3, 4, 5 knows that they need to trade in 3-lot increments. So if you're going to be trading 3 accounts, you need to be able to trade a 3-lot minimum. So I have here an example of a 9-lot limit. That doesn't necessarily have to be there. It might be an 18-lot limit or a 27-lot limit. Usually it would be in an increment or a multiple of 3 in this case, because that's our lowest common denominator, right? And then we've got a daily risk limit, say, of $6,000. So if that were to happen, that means that $6,000, if that risk limit were to be hit, God forbid, the risk limit is hit, the account is down $6,000, that $6,000 loss would be allocated to account A, B, and C. And because this is a 1-1-1 breakdown, one could surmise to say that it would be a $2,000 hit to each account. So this is just an example of a very simple allocation where you tell us in advance how many contracts are supposed to go to each account. In this case, it's just 1-1-1, super easy. We set a max contract limit with your input, just like we normally do. And we set a daily risk limit with your input like we normally do. And you just need to make sure you stay in that minimum multiple of 3 contracts. All right, now we're going to talk about some implications of this here in a further slide, but this is a simple example that implies that we're trading 3 contracts or 3 accounts. Okay. All right, now here's another one that is a little bit more complicated, but not terrible. The allocation here, let's say the allocation number is 67890. And we've got account D, E, and F that make up this allocation. But notice account F, that's got 2 contracts allocated to it. Well, why would account F be getting 2 contracts and the others are getting 1? Maybe it could be because account F has more money in it. Maybe it could be the person who owns account F is a little bit more comfortable with risk and is okay with getting 2 contracts for every 1 contract the others are getting. So the lesson here is that the accounts don't necessarily have to be the same size, because some accounts could get bigger contracts than others if the account holder wants that, or the person managing the allocation has the authority to make that decision. So in this case, we have account D is getting 1, account E is getting 1, account F is getting 2. We might set up a 12-lot limit if the customer who's managing the allocation wants that limit. We could increase that number if the balances in these accounts can support bigger numbers. It doesn't have to be 12, but again, the lesson here is that you'd probably be trading in a multiple of 4 because you're going to be doing a 4-lot every trade. All right, so discussion 1, a little simpler or very simple. Discussion 2, pretty simple, but with one little curveball, right? Account F's getting 2 contracts. All right, so anything unclear so far? Okay, Jack, good question. So for instance, with the 3 contract case, do the trades have to be all in, all out? No, they don't have to be all in, all out. And that's an interesting question, and it's a very thoughtful question. The question basically means like, okay, in allocation number 1, if we're doing a 3-lot, what if I buy 3 and then I sell one at one price, another at another price, and the last one at a third price? That's okay, because at the end of the day, all the fill prices are going to get averaged. So our regulators really like that because it's fair. We do an average pricing model where we average out all the buys and all the sells in the allocation account for the day, and everybody gets the same average price. So it's very fair, and as long as you are trading that minimum multiple, everyone's going to get a trade. So in that other example, account A wouldn't necessarily get the worst fill just because it got the first target hit of the 3. All of them are going to get spread around. You just want to make sure you stay in that 3-lot minimum increment. And this kind of touches on that, right, Jack? Fills at different prices. So let's say you buy 3 contracts of the E-mini S&P at the market, and you get filled 2 contracts at 21.80 and 1 at 21.80 1/4. You have an average price of 2180.083. So every account will get an average fill of 2180.083. So how do we, and it says even out here, how do we do that? Because that's between 2 tick values. So in this sort of a situation, what we do is we round the decimal up or down, and then we issue a debit or a credit in dollars to make the math work. So as an example, like let's say that you're buying and we round the price up. So we're giving you an artificially high buy price. Then you're going to see a credit to the account in dollars to make up the difference. Let's say that you were selling, so we round up and you were selling, so you're getting too high of a price. You're getting too good of a fill because we're rounding up to the next tick. Then you're going to see a debit come through. That's not a fee. It's just us making it right with respect to the rounding of the prices versus your actual average price. So that averaging system works very, very well. It's completely automatic. There's no work on our side to do it. I've never seen an error with the average pricing model, and it's just a great model. All right. Vin, your question, 500 per contract, so it will be 2,000, right? I think we were on a prior slide when you mentioned that, but I'm not. I mean, if your question would be, can you use $500 per contract for the E-minis? The answer is yes. So if you want to be able to trade a 4-lot with $2,000 in your account, in theory, that would be possible. That would represent an enormous amount of leverage, lots of risk, obviously, but we do have the capability to offer day trade margin as low as 500 a contract, so that is possible. All right. Robert, your question about allowing people, do you allow me to trade crude and the E-mini S&P in an IRA with both long and short positions? Well, you can't be long and short the same market at the same time in the same account, but you could maintain two allocations that are independent of each other if necessary. So you could have one allocation where you're trading your E-mini S&P and your crude, and you could have another allocation allocating to the same accounts where you also have E-mini S&P and crude access. And if you see a signal that comes into play that would interfere with your existing position, you could do it in your other account. So we do have clients who trade multiple systems, like multiple strategies of the same product, where at times they could interfere with each other. So that's what we can either do different allocations or sub-accounts for that. Okay, so maybe I over-answered that. You said I meant at any one point I would only have one instrument and it would be either short or long. Yeah, you can be long or short any of those products in an IRA account. So the fact that it is an IRA account does not imply here any different circumstances for what you can or cannot do. Okay, Lisa, so your question about scaling, this kind of goes back to what Jack was asking. Lisa asks, can I cover one account at one price and cover the other two accounts at price 2? No, because you don't get to pick who gets what. What's going to happen is you're going to cover one contract at one price and you're going to cover the other two at another price, and then we're going to average them all together and everybody gets the average. So you can't pick and choose who gets what price. Okay, that's considered cherry picking and you can't do it. All right, Robert, we don't offer those indexes because those aren't futures, okay? All right, now let's throw out another curveball. All right, let's say you're doing an allocation that allocates to 3 accounts, 1 lot apiece. So you're supposed to be trading a 2 lot. But you accidentally buy and sell 2 contracts. What happens then? If you don't correct that by the end of the day, one of the accounts will not get a trade. Why? Because we can't just allocate P&L. We have to allocate actual fills. We have to allocate fills. So if you're supposed to be doing a 3 lot because you're allocating to 3 accounts and you buy and sell a 2 lot and nothing else happens the rest of the day, then one of the accounts is not going to get the trade. And what account doesn't get the trade is not something, again, we can pick. It's going to be occurring by a predetermined random or a regulatory approved method such as high price to high account number, something that doesn't imply any type of favoritism. So the short-term solution is that if you buy and sell 2 contracts and you're supposed to be trading 3, then do another 1 lot so that you can get to 3. And then that way everything gets averaged at the end of the day anyway. So you really want to be trading in that correct quantity. If you end up in a wrong quantity, it's not a catastrophic problem. It just means someone's not going to get the trade. Okay? David, we do not support option trading at this time. No. Okay. Now, here's another little conundrum, and I apologize for the text, the amount of text on this slide, but this one is a little bit tricky. Let's say that your account is in an allocation, but you also want to trade your account alone. All right, so let's say that again. So you have an account, and let's say you've got 3 accounts total, and they're all yours, and they're in an allocation that you're managing. But there might be a situation where you want to be able to trade one of your accounts on its own outside of the allocation. Maybe there's a risky trade that you want to take only in one of your accounts. Let's say you're trading, a market that you don't want to expose the other accounts to. How do we do that? Well, we can do that, but there's a reason why you're not allowed to do that without a special consideration. And let's just say that we have an allocation here. In this case, I'm using the number 2222. Okay, so let's say you've got an allocation, and your account, which is account BBB, has $3,000 in it, and it's in that 2222 allocation. So in this hypothetical example, let's say that allocation is allocating to two accounts, BBB and CCC, and has a $4,000 risk limit. Well, what would happen if you had a really, really bad day and you blew out your allocation account and simultaneously you blew up account BBB on its own? Well, in this example here, if you were to hit a $4,000 risk limit in the allocation, $2,000 of that's going back to account BBB, and account BBB also has its own risk limit of $1,800. What happens if you hit both? That means account BBB is getting basically getting $3,800 in losses because it was traded on its own and it was traded in the allocation at the same time. Therefore, it is negative. It is debit, $800. That's no good. That's why we don't allow people to trade their own accounts on their own and put that same account number in an allocation. All right, now that's a bit of a one to get your head wrapped around, but does everybody understand the risk side of things here? Our job is to be a risk manager, right? So we unfortunately are we have to think in a very pessimistic, standpoint. It's not fun, but it's necessary because anomalous events happen in our business, as most of you know. So I want to make sure everybody understands the risk issue here, and then we'll move on. But basically the idea here is that if you want to trade an account outside of your allocation, we can set up a sub account so you can do that. But you really need to make sure that your limits are okay. So in this example here, if you're trading account, a sub account of BBB, that sub account's got to have really tight limits on it because we can't let you blow them all up at the same time. We really have to keep things tight. So it is possible to do this. It just requires a little bit of finagling with our risk system because we need to make sure that your balance can support the account being traded on its own and being traded in the allocation at the same time. So again, it is possible. It's just you need to have enough money to really be able to do that without an issue. Okay? Jack, do allocation accounts use the DOM or can you use the charting? You can use either. So it's the same, it's just an account number. It doesn't really matter that it's an allocation account. The allocation can be traded just like a regular account. Okay? Robert, no, you can't link the accounts as you described there without putting them in an allocation. So the only way to do that linking is to have them both in an allocation. Okay, so an allocation might be right for you if, number one, you have more than one account with us. Number two, you want to trade the same strategy in both and you don't want to manage separate DOMs or chart traders. And number three, the account balances are reasonably similar, although we can allocate different quantities, so they don't have to be exact. In a perfect world, all the accounts are a very similar balance. It doesn't have to be that way. So as long as the bigger account balances are getting more contracts, it's really okay. So they don't necessarily have to be the same. Okay. Vin asked, can an account be added as a sub and also removed? Well, I mean, you can't go in and out of the allocation throughout the day, and we don't want you making changes to it every day. As I mentioned, it is kind of a manual process, but it's something that usually we put in place and it kind of just runs on its own until someone needs to make an adjustment, and then we can make that adjustment. All right. Now, why are we talking about this topic and also talking about Midland IRA in the same breath? Well, it should be fairly obvious by now. We are frequently asked about IRA accounts. And mostly the people who ask about IRA accounts are already clients of ours. So the tendency is that people usually, if they have the risk capital, will open up a cash account first. It's really easy. You go online, you fill out the form, wire in the money, and we're up and running. So it's typically a simpler process. So usually what will happen is someone will open up the personal account. They think, man, I love this platform. I love Infinity so much. I want to do another account. And a lot of times that second account becomes the IRA. So as long as you consider the IRA account to be risk capital, which again, money you can afford to risk without hurting your lifestyle or your retirement horizon, we can go ahead. We just want to make sure you're comfortable with it. We generally recommend, if it's possible, to trade a cash account first to make sure that futures trading is for you before you trade IRA funds. Again, if you lose money in an IRA account, you can't just put it back and get another tax break, right? So if you guard those funds very closely, we would generally recommend you do a cash account before you go the IRA route. All right. Now, as far as Midland goes, Brad Janitz is here. He's not talking yet. He will be in a minute, and he's going to talk with us about IRA accounts. Infinity has worked with lots of IRA custodians over the years, many, many different custodians with a number of different clearinghouses. And one of the things that we like about Brad and Midland is that they have a responsive and solid admin team. And that is 80% or more of the battle when it comes to doing a rollover from another custodian. So oftentimes when someone wants to do an IRA account, they open up the account with Midland, and then they need to now get the money from wherever it is. So if it's another company that we take a lot of IRA business from, like TD Ameritrade or other places, it's pretty easy. The process is already established. But what if it's a very obscure custodian or some company that you can't pick up the phone and talk to as easily? You don't want to have to deal with that. You want Midland to do it. And one of the things that Midland did from the get-go when we first started sort of deciding which company we were going to mention the most when people ask us about this is they had established, I don't know how they did it, some sort of communication channels with the back offices of these other companies, and they're just able to get the rollovers done quicker. And that's in this business where custodians often perform similar functions, it's really just about service and speed. And in some ways, Midland's admin team has reminded us a little bit of ourselves, which we can appreciate what it feels like to email someone and get a response back in a minute, or pick up the phone and talk to somebody really quickly. That's how we act. Most of you know that by now. So that's the reason why we bring Brad and Midland into the events from time to time and welcome them into the fold, so to speak. It really has to do with the solid administrative experience that they have created and is getting better and better all the time. So that's really the reason here. So that's all I really have on the allocation front. If anybody has more questions about this, there's actually a few that I think I may have missed. Let me just read a couple of those. If your son, Jack, wants to open an account and wants you to be able to trade the account, that's okay. We can do that through a power of attorney situation. That's not a problem since it's a family member. And Robert, yes, you could trade those two different account balances in an allocation without a problem. You can link an account, Lisa, that belongs to a sibling or a child as long as they're of age, if they're adults. They can have an account here, and there are some restrictions on that because they have to have income or net worth, or you might have to make it a joint account, but that's more of a compliance general question. Mike, I believe so. Your question about having a 401k in your LLC, you could probably open that LLC account with us. I don't know if you need to go the custodial route for that, but that'd be a good question for Brad. And then linking accounts, Lisa, yeah, you can link accounts really with anybody that is a relative. You can trade for other folks who are defined as close family or friends, but you can't solicit, and that's a bigger question. Power of attorney, whether you can take power of attorney over an account, really that's more of like a case-by-case thing. So the linking, the technology is not the issue. The question is, is what you're doing okay without being registered? And it's really a circumstantial thing. So you'd want to talk to your representative a little bit more about that, okay? So you can, you can trade other people's accounts if the circumstances are right. Luna, you're asking about that too. But that's something you really want to talk through with your representative, okay? So Brad, thank you for taking the time to come and do this presentation with us today. If you want to, it looks like you got your mic on, yeah. So thank you again for doing this. I'm going to kind of shift off into the background. So if anybody has more questions, I'll be typing some answers in. But Brad, if you want to take it away, go ahead. Thanks for coming.
Yeah, not a problem. And thanks, Patrick, for allowing Midland IRA to represent the IRA community in this presentation. And I'm personally very excited to talk to the Infinity Futures clientele. We've always had just a really good working relationship with Infinity and their mothership company Transact, and their clients have always been fantastic to work with. So I know that everyone involved in this presentation is probably a very intelligent person. So with that, let's try to get my screen here to operate. Patrick, by chance, can you see my screen right now? Because I don't think I can.
I'll go ahead and make you the presenter here. Here it should come through. You should start to see a pop-up allowing you to pick your screen here now.
All right.
There we go.
All right.
Looks good.
All right, here we go. All right, sounds good. So trading futures in an IRA. So basically the concept that we're going to talk about today are real self-directed IRAs. And so what I mean by real self-directed IRAs are not the IRAs, not the self-directed version that you see on TV where they basically allow you to self-direct your account into the stocks, bonds, and mutual fund environment, but to self-direct your retirement into the alternative investment market. And so not effectively being limited to the stocks, bonds, and mutual fund market. And more specifically with this presentation, getting into the rapidly growing futures market, where it seems that the capabilities and the flexibility of the instruments are becoming a little bit more exciting to your everyday investor that wants to grab a hold of their money and take control of it. The futures markets are really growing in that capacity. So before we kind of get into the nitty gritty, just a little bit about Midland IRA here. So we are a self-directed IRA company. So we provide IRAs that allow for investments into alternative investments in a variety of circumstances. We have offices in Chicago, what we like to call the Futures Hub of America. And then we also have an office down in Fort Myers, Florida, because the owner of our company just really likes the sunshine when Chicago winters get a little brutal. All right. This slide here does say that we have about 10,000 accounts. It's a little outdated in the sense that we have about 15,000 account holders at this time and rapidly growing by hundreds and each month. And with that, being in Chicago, we really just gravitated to the futures industry, not because of the communities here, but we've enjoyed servicing the clientele. And Patrick gave us some kind words about our service that we try to improve every day. But really, we have gravitated towards the futures client because of dealing with companies like Infinity, and we've really tried to strive in creating our back office systems to allow capabilities and where we're being able to talk to the clearing firms and talking to the other IRA custodians, because we have back office admin people. And so it was kind of one of our missions as a company to say, hey, we understand these back offices have other issues and things that they're dealing with. So how do we make this easier for everyone? So we've really taken upon ourselves to get to know the back offices of all the companies that we have to work with in order to service the client, in order to really understand their needs, so that way we can make things easy on them. And then that in turn makes it easy on us, which in turn makes it easier for you as the end user of this experience, rather than having to explain things to the company in which you're working with. And just from a historical perspective, we've been around since 2004. Both offices have been around since about that time, and just kind of rapidly growing in each area as the alternative investment industry is just growing in popularity. And so one thing is very important to understand is that we don't manage money here. We provide a conduit that allows people to tap into their retirement account and invest in how they see fit, whether that be trading futures or whether that be a variety of other concepts that we help people with. But at the end of the day, these are decisions that you're making. And I think that's why you're coming to this idea or concept is because you want to take control of your money and invest it in the capacity that you see fit. If you're looking for the financial advisor that's going to guide you along the way and follow the green line, then we're probably not the place for you. We're providing a situation where basically you want to take control of your money and go make something happen with it yourself. And so just to kind of give you a little quick synopsis of the process in Midland, try to play a quick little 2-minute video here for you to enjoy and put some pretty pictures on the process.
Today's investors are looking for alternatives to the traditional path of investing only in stocks, bonds, and mutual funds. One of those alternatives are opportunities within futures, foreign currency, and commodities markets. Very often, though, investors, both new and experienced, have trouble understanding how to gain access to their IRA accounts in order to trade futures or foreign currency. The process can appear complex or arduous to even the most veteran industry professionals. That's where we come in. We are here to make things easy to understand and show you how, through Midland IRA, you will have the ability to invest your IRA funds into futures and Forex, all while keeping your account tax deferred. Midland IRA is one of the few IRA administrators in the country that offers truly self-directed IRAs, giving you the ability to invest your IRA in anything the IRA. There are many strategies for investing your self-directed IRA. Fund your IRA in 3 different ways. Transfer funds from an existing IRA, complete or partial, rollover funds from an old 401k, make an annual contribution. 3, you will need to complete a trading account application for your futures Forex brokerage firm. We will review the brokerage documents to make sure the account is in the name of your IRA, not you individually. 4, finally, Midland IRA will wire funds to the broker once we have received direction and final approval from you as the client. And that's it. Now your IRA.
All right, so I think you get the gist. Plus, I heard that the audio was a little bad on that video. So we're going to kind of move on here and kind of go through what that video was talking in a little bit more detail anyhow. So first off, I get this question a lot. Why do I need Midland IRA? And so to answer that question, we're going to take a step back and give you a history lesson. And so in 1974, when IRAs were created, they created these IRAs for people that weren't working for big companies like Ford or GE or a lot of the big corporations out there that provided pension plans. And so they needed another way for self-employed individuals or small businesses or just other individual working class people that needed access or the ability to save for retirement because Social Security was just was in place, but it was becoming an issue just for everyone to survive on. And so through that, they created these accounts that give you tax deductions for putting money in. They give you basically a tax efficient way to invest your money. And then also you get benefits upon withdrawing this money, which we'll get into those a little bit in more detail later. But with that said, the government pretty much said that if we leave this to the people to understand the rules as well as follow the rules, that we're probably going to create more problems than we are solutions. And so therefore, they created our industry of what we call IRA custodians today, that our responsibility is to control cash flow, make sure that individual investors can understand the rules, follow the rules. You have somebody in place that's kind of overseeing the transactions that are happening within the IRA, recording that information, and then providing an efficient manner for you to get your money out of the account and not have to deal with all kind of the cumbersome tax reporting issues. We take care of that stuff for you to make your life easy. That way you can take advantage of IRA accounts and not have to really think about too much besides how much money you're going to put in each year and what investments you would like to take care of to make happen. So basically, IRS requires that either a qualified trustee or custodian hold the IRA assets on behalf of the IRA owner. So that's what we are. We are a qualified IRA custodian regulated by the banking industry that records information. So we record cash flow, and then we also record investments that are made. We custody those investments and then basically report all this information back to the IRS, letting them know what's going on. And we do it in basically a nice price efficient manner so that, again, you can decide to invest how you would like to and do it in a way of tapping into the alternative marketplace, such as trading futures with Infinity Futures. And so why should I use Midland? I kind of got into this a little bit earlier, where we really pride ourselves on our expertise. So we are committed to the futures industry. It's actually one of our specialties. So I would say a vast chunk of our clientele come from the futures industry. So we've catered our systems in that manner. And so what I mean by that is your Midland IRA online portal provides tools that allow you to manage your cash. So if let's say that you set up with Infinity and 6 months goes down the road and you're just really killing it on your trading and you say, hey, I want to go on vacation, I want to pull $5,000 back. Well, you can make all of that happen and put that in your bank account by sitting in your pajamas, not really picking up the phone and talking to us, not filling out a paper form. You can do it all online, and we take care of it all on the back end and send you your money, and it's all nice and clean. Okay, that goes on the front end as well. When you're trying to put more money into your Infinity account, most of this stuff can be done online unless your other IRA company that you're transferring from makes it a little bit more paper intensive. But other than that, pretty much everything that you'll ever want to do with us, you can do online. However, we do have the ability to talk you through things if circumstances arise where something seems a little bit more complicated, and we're happy to help in that regard as well. So our commitment to the futures industry and our mission to always evolve our processes to make the lives easier of the futures trader is really what sets us apart from any other company in our space. And so now let's get in the IRA. So what are the benefits of an IRA? All right, so most people really don't want to just rely on Social Security. So everyone dreams to be on a beach somewhere, drinking margaritas, playing golf, and spoiling their grandkids. Well, that's a difficult thing to do if all you're doing is relying on Social Security. So you have to put money away, whether that be in a savings account or some other vehicle, hopefully invest that money in a productive way, and have something there for when you retire that can supplement your Social Security. And so again, 1974, IRAs were created for everyone to be able to tap into an efficient way to save money. And so what does that mean? That basically means that there's two big components. And we'll get into the type of IRAs later, but really there's two components to an IRA that make it beneficial. So first, you get a tax deduction for putting money into this account. Okay, so you lower your income and you're going to get more money on your tax return each year if you put money into an IRA. Okay, and then when you put that money into an IRA, it's in basically an IRA account. Okay, and then from there you can invest it, so you can trade futures with it or you can do something else. And then as you make money, you're not paying taxes on the money that you're making. So all that, so over time, through years and years and years, that gives you the ability to effectively compound the money that's being made, because you're not shaving off 15 or 25% of it to pay the tax man. That money just stays in that account, and you're allowed to compound it over time and hopefully just continue to make more and more money over the years until a time comes when you need to withdraw it. And even if you withdraw it, let's say that you're 35 putting money into an IRA, that's like one of the prime years, prime time of your life and making money. So you're going to be at a higher tax bracket. When you're, retiring at 65, 70, it seems to be getting, older and older as we get older. And when you take that out, you're going to be retired. So you're going to be paying in a lower tax bracket anyhow. Okay. So there's obvious, tax advantages there. But let's say that you don't believe me. Let's say that you think that taxes are going to keep going up, and that at the time you retire, taxes are going to be way higher than what they are now. Okay. Well, there's a place for you. There's the Roth IRA, which a lot of people say is kind of like the Cadillac of IRA accounts, which in my opinion it is. And so the Roth IRA, you don't get the tax deduction on the money going in. So basically, you go to work, you get paid, you have money in your checking account. So you've already paid taxes on that money in your checking account. Then you can take that and you can contribute it to a Roth IRA account. Bad part is you don't get the tax deduction. The good part is you still get to invest it. You're still going to have that compounding effect where you get to make money on top of money as you invest it over time. You're still not paying any taxes as that money's in that Roth IRA account. And then as long as you hit a couple benchmarks, those benchmarks being you've had your Roth IRA for 5 years and you're 59.5, then everything you made over the course of time is tax-free. Okay, so if you think taxes are going up, Roth IRA is your place. Put money into a Roth IRA, invest it over time. You're taking it out tax-free. It's a wonderful vehicle, but no way you slice it. If you think taxes are going to stay where they are and you really want that tax return money today, you can put money into a traditional IRA. If you really don't believe in the taxes or think taxes are going way up over time, then you got the Roth IRA. There's an option for no matter what side of the fence you're on. All right. And so what type of accounts can I trade? So Patrick did mention this earlier when discussing the one-click component of their service. And so we have self-directed trading. That's one of the more popular ways of trading futures. People come to a company like Infinity. They love the futures markets, love the platform of Infinity, and decide, hey, let's tap into my IRA money and make it work for me in a different capacity and hopefully make a little bit more money than where it's at now. So self-directed trading, a very popular and easy way to get involved into the futures markets. Then there's the other two. So there's what we call automated accounts or systems. So you have signals that are being pushed out to basically inform you as the trader to make a trade. These are very popular ways of trading as well. You can talk to Patrick probably more specifically about those types of accounts. And then there's the managed accounts that are basically you giving authority to a commodity trading advisor, basically a professional trader, to do trading on your behalf if you maybe don't feel comfortable, but you enjoy the futures markets, but you just don't feel comfortable actually pushing the button. So all of those different types of tradings are available within IRA accounts and available to do, through a Midland IRA account. So here are basically the 5 type of retirement plans that we here at Midland IRA offer, and more specifically, you as an individual would ever set up. So it's a little bit different if you're going to work for IBM and you have a 401k plan with them. That's a different system, different setup. Here are accounts that are tied specifically to an individual where you get to make all the decision making. Okay, and so your two simplest that I kind of went over earlier would be your traditional IRA and your Roth IRA. Traditional IRA is kind of your standard run-of-the-mill IRA. It's a pre-tax account. So you put money in, you get a tax deduction, you invest that money over time, you get to compound that money over time, and then when you pull it out upon retirement age, then you're going to pay ordinary income tax on whatever tax bracket you fall into for that particular year. All right. They have similar cap rates at $5,500. So I think Patrick made a comment earlier that IRAs should be risk capital if you want to get into the futures markets, because if you basically if you lose the money, you're only capped at, you are capped at $5,500 or $6,500 if you're over the age of 50 to put that money into it. So you can't just write a check for 20 grand and throw it in. You are capped on an annual basis of how much money you can put into these accounts. Okay. And then there's the 3 others that are more employer sponsored plans, but they're more for either small businesses or self-employed people. So a SEP IRA, which is kind of an easy plan to set up. It's for self-employed people. We find a lot of attorneys, CPAs, farmers, basically self-employed people that fully intend to stay self-employed for the rest of the time, setting up these types of accounts because you can put a lot more money into it rather than just $5,500. So you can see here on the chart, it's 25% of your earnings up to $53,000. So it is the lesser of that amount. So 25% up to $53,000. So if you're really in a good income earning year and you're self-employed, this is a really awesome way to put away a lot of money. Okay. And then a similar plan to the SEP IRA is your individual K plan, or basically individual 401k plan. All right. This is, if you are a self-employed individual, this is the Cadillac of retirement plans. And I'll explain why. So it's got a similar contribution limit of $53,000, but you also have a catch up if you're over the age of 50, so you can go all the way to $59,000. Okay, but then it has a few little features to it that are pretty cool. So first off, SEP IRAs are pre-tax IRA accounts. Okay, so you get a tax deduction for when you put that money away into that account. So you can get a $53,000 tax deduction. So that's a pretty good tax return probably coming your way. All right. However, if you're of the believer that taxes are on their way up, it doesn't matter. You're basically stuck in the situation of only doing pre-tax dollars. All right, so you don't get that Roth component. But with individual 401k plans, you have a Roth component to them. So you can actually put away money in post-tax dollar form, meaning you don't get the tax deduction for putting it away, but you get to put away a lot more money into basically, a similar format of a Roth IRA account. And so you can really boost up your Roth money very quickly if you're self-employed and qualify for one of these plans. Because obviously up to $59,000, that's a lot more money than just the $5,500 of a Roth IRA. Okay. And then there's the simple IRA. This is kind of a less popular plan because it's more for small businesses. Usually you find them in like small business with let's say 10 people. They're similar to 401k plans, except for they don't have all the crazy testing requirements that full scale company 401k plans do. So it's just a nice, easy cookie cutter plan where you can put away a little bit more money than a traditional IRA. It is a pre-tax IRA account, but it's for small businesses. Got a few employees, you just need something easy and cheap to set up. A simple IRA is usually the way to go there. Okay, so here's a little just kind of breakdown of the contribution types, the different plans that are offered. You can find a lot more detail of this information on our website as well as the IRS website as well. But all good plans, just different for different people. But just kind of your two takeaways here: individual 401k plan has a Roth option to it. And also, if you ever get in a pinch down the road where you just need to borrow some money, IRA accounts don't have a loan feature to them. You can't borrow money from an IRA account, but you can borrow money from a 401k plan. So if you set up a solo 401k plan, you get in a pinch, or maybe you just want to remodel your home and pay yourself back within a year, you have the ability to take a loan from your individual 401k. So again, a little bit more flexibility to that plan. It's kind of why I call it the Cadillac of retirement plans, because it just has some flexibility, some cool tools to it, as well as you can put away a lot of money very quickly. All right, so what is Midland's IRA role when it comes to this whole futures business? So Midland IRA Incorporated, so we're the entity that kind of holds your IRA account and does all the tax reporting and cash flow management of it. Okay, so what does that mean with respect to Infinity? So when you set up an Infinity account and let them know that they would like to, or that you want an IRA with Infinity, well, basically what happens is that you're setting up your IRA actually with Midland. Okay, so again, we're doing the tax reporting, we're doing the cash management, but what we do is we set up an Infinity account that is effectively titled to your Midland IRA account. So when you log into your Infinity account or get your statements, you're going to see this titling here, Midland IRA Incorporated for the benefit of John Smith IRA account number 12345. So that's going to read on your statements, basically meaning this account is being custodied by Midland IRA. Okay, and so So with that, our responsibility is to hold title to that futures account. But at the end of the day, our cash, the cash that gets deposited. So if you transfer an IRA from, let's say, Interactive Brokers over to Midland IRA for the intentions of trading with Infinity, so your cash is going to come over. It's going to sit on our books for a very short period of time until you authorize us to push it over to Infinity or their clearing firm, Transact. So your money at that point in time is going to be on hand with Transact. So just as very similar as if you're opening up a personal account and you wire money into them directly. Same sort of mechanic, except we're involved and we're going to be the ones actually wiring that money into that account, not you individually. So that account is titled to your Midland IRA account, and then we handle the cash management of dispersing your money from your Midland account over to your actual trading account where you perform your trades until at some point in time you direct us to pull that money back, and then we pull that money back to your Midland account, and then from there you can take a distribution or decide to do something else, whatever you decide. And then with that, we will handle all the ongoing tax reporting that ever comes about. So if you make contributions annually, monthly, weekly, whatever you'd like to do, there's going to be tax forms that are generated. We take care of that for you. If you ever decide to take distributions, we'll take care of that for you. If you do a 401k rollover from an old 401k plan that you used to work at, there's tax forms associated with that we handle and process and send you, so that way you can log into TurboTax come April or whatever you decide to use to do your taxes. Okay. Some frequently asked questions. So first off, kind of going on some of the stuff that Patrick said with sub-accounts. Sub-accounts are very popular with IRAs, basically meaning that people, they want to maybe trade a couple different strategies. Patrick got into a lot of examples earlier. That is something that can be done within IRAs. So you're not just glued to one account. So if you want to trade different strategies or different instruments, and you want to separate those into different accounts, by all means, you are able to do so. What we make happen with Transact is we have a process in place where effectively if you open that sub account, it'll again get titled and linked back to your Midland IRA account. It doesn't cost anything additionally with Midland. It's just an additional account. And you can have one, you can have 50, you can have as many as Infinity allows you to have. So that's all very doable and completely up to you on how you want to work your IRA. All right. So let's take it from the top here on question number 1. I already sent in paperwork to the trading company to open a trading account. Do I still need to send a copy of the trading account application to Midland IRA? So in theory, yes. But in reality, we have a good operating relationship with Transact. So if they know that it's an IRA, they will generally and have your authority to do so. They will push that information over to Midland for us to get the accounts properly linked up. So from a service perspective, we make sure that that's handled in an efficient way for you. To make your life easy. But yes, we're required because we custody all assets with respect to your IRA. So any documentation that supports those assets, we have to see and keep on basically in an electronic vault on your behalf in case you ever get audited or we ever get audited or a variety of other circumstances. Okay. I already have a trading account with this company. Do I need a new one? So Patrick kind of mentioned this earlier, but yes, if you already have a personal account and then you want to set up an IRA to trade with Infinity, it is going to be a separate account because of the tax nature of IRAs and the fact that you get a tax benefit for investing within an IRA. There's a different tax ID that's associated with IRA accounts. So if you already have a personal account, you can't just commingle the funds. You will have a separate account set up in the name of your IRA, and then you can use the options that Patrick listed off earlier to make your trading a little bit more efficient. All right, let's go up one. I want to remove funds from my trading account. Can I do this with them directly? So you can, however, they will not send you the money. Okay, so you can call up Infinity or Transact and tell them to send that you want to withdraw your funds. But what will end up happening is they will effectively send that money back to your Midland IRA account. We will deposit those funds and then probably give you a call and ask you what you actually want to do with them. Or if you want to keep things efficient, you can log into your Midland IRA portal, basically click a button that says I want to do a trading account withdrawal. Say I want to withdraw $5,000 or whatever, that automatically triggers our system to pull the money back from Infinity, and then it comes back to us, and that way you don't have to make any phone calls. So that would be my suggestion to you, but if you wanted to call Infinity to make that happen, you are more than welcome to. All right. What happens after my trading account is open? After the account is open and funded, you're going to work directly with Infinity, just like you would imagine, to place your trading requests. They have a portal and a platform in which you can process those trades. You don't really need to deal with us every day. We fall back into the scenes really doing reporting mechanisms at that point. If you want to call us and ask us questions, you are by all means happy to. But other than that, we want to get out of your way, let you trade, let you do your thing until you need us for some other circumstance. So how do we actually get this going? So there's effectively two pieces. So it's a 1, 2, 3 process, but two main components that you have to do on your side. First is complete a Midland IRA application to establish the IRA and allow us to start the funding process, which could be transferring from an existing IRA. You can do just a portion of that IRA. You can do the whole thing. Really, it's just a matter of up to you. If you want to roll over a 401k, we'll start that process when you complete our IRA application. Or if you just want to make your annual contribution and start a brand new one, happy to do that too. That will be information that you'll include in the IRA application, but you'll basically complete the application and then start the funding process right at that time. And the reason why that's step one is because the funding process is the longest part of this whole thing. It can, if you're transferring from another IRA, it can take about 7 to 10 days to make that happen. Contributions are a little bit quicker. 401ks can actually take a little bit longer, but that's the longest part of this process, is getting your money from your existing retirement account over to us. So we always say that's step one. Step two would be to complete an application with Infinity to actually establish your trading account with them, and then to acknowledge to them that you have an IRA established with Midland and that you're ready to go. Okay. Step three, after we get your Infinity account linked up to your Midland account, and we have your money from your existing retirement plan, then effectively we send you a notification to authorize us to fund your Infinity account. So you're basically going to click a button that says, yes, Midland, I want you to send my money over to Infinity so I can start trading. You click that button, 24 hours later, you have money in your Infinity account ready to go. Simple as that. All right, so easiest way to get started, if you want to just look at our website, there's some really good information, a couple good tutorial videos on this process, and some of the frequently asked questions that we went over today, as well as others. But really, apply.midlandira.com. That takes you right to our online application, which takes about 5 to 10 minutes to complete. You'll electronically sign everything, so it's pretty simple. And then that's basically step one, in which you'll include your funding method, which is again, IRA transfer, 401k rollover, or making your contribution. And then once you get that part done, you can move over to contacting Patrick to getting set up on the Infinity side. All right, 7 to 10 days later, you'll be trading. Simple as that. So again, we have offices in Fort Myers and an office here in Chicago. If you have questions, feel free to call either of those numbers and ask for Brad. I'm the only Brad here. Otherwise, there is an option to talk to our Futures Forex division. So we have a division that caters specifically to the Futures and Forex trader. So you can call them, ask any questions. So they have the knowledge and expertise to help you with anything, either the setup process or just questions about getting set up with Infinity or any other random items that might come up. Other than that, I think I'm going to push it back to Patrick to maybe funnel some questions.
All right, cool. Thank you for doing that, Brad. Appreciate it. There's There were a couple questions that came through that I wanted to pass along, and some of these, you were not, I mean, I certainly don't know the answer, and if you don't, some of these sound tax related. So what I'm going to ask people to do is, if you have, and I'm going to take the screen back here for just a minute. If you have a question that is tax related and we can't answer it, email it to your rep in our office, because we have someone we can send some of that stuff to if necessary, hopefully to provide some guidance. Okay. But a couple of the questions that came through, and one of them was from Dan. I really wasn't sure about this, but he said, if you get taxed as an LLC, will you be taxed through the IRA as well? I hope not, because that would be double taxed. Any idea how that works? I really wasn't sure what he meant by that, but Dan, if you have like an LLC that your IRA is like the owner of, then you're not using a custodian in the traditional sense. So am I right on the right track there, Brad?
Well, actually, I mean, it kind of depends on the setup. So IRAs do have the ability to be an investor or the whole investor into an LLC. So in theory, you can have a fully owned IRA LLC,
right.
Okay, and where an individual can be the manager of that LLC,
right.
And so from there, they can basically set up an LLC account with a futures brokerage such as Infinity. But here's the thing. So, if that's the case where it's an IRA that owns an LLC, a single member LLC is basically a disregarded entity, which create a flow through to the IRA. But even then, the IRA is, basically a tax exempt entity or tax deferred entity. So it shouldn't be paying taxes on gains that are done within an LLC if it's the sole owner of it.
Right, okay.
I'm pretty confident in that answer. Maybe take that up with the CPA, but I'm pretty confident now.
Yeah, that sounds like a question for a tax pro, but thank you for giving it a call.
Yep.
Another question that comes up from time to time is, and this is more of a question for me, but people have to pay data fees these days because the CME wants money for their data. So one question that often comes up, everybody, is if you open up an IRA account and you already have an account here with us, do you have to pay the data fees again? And the answer is no. And the reason why the answer is no is because we can attach your new account to the existing user ID that you already have with us. So if you have a user ID on your existing account that's ABC123 and you open up another account, the exchange bills for data per username, not per account number. So if you only have one username, then all you have to do is have us, instead of generating a new user ID when your IRA is funded here, you would just have us attach the existing user ID that you already have to your new funded account. So when you go into you go to the platform and you get to the login screen, you guys have seen this a million times before, right? It looks like this. So what happens is you punch in your user ID and password, and then in this account field, there are two numbers instead of one. So we're assuming you're not really using an allocation like we talked about at the beginning of the presentation, but we can attach more than one account number to one user ID. Okay. Okay. For Sith, your question, we can send me an email. I know you're in my database because you're getting emails from me, right, Sith, about from Infinity in general. I'll send you instructions on how to go both routes. Okay, I can email that to you myself. But if you want to open up a cash account, folks, you can do that on our website. If you want to open up an IRA account, as you heard from Brad, you got to fill out the Midland app on their side, and you have to fill out our app as well. We have a version of our application that's kind of helps you through how to fill it out properly. So just contact your rep in our office, and we'll make sure to get all the details to you. Another question, Brad, that came up, and this you may know the answer to this one. I certainly don't. It's from Frank, and he says, when you're transferring an existing Roth IRA to you, meaning Midland, the 5-year ownership period required to withdraw tax-free is the original IRA opening date, not the date it was transferred to you, correct? Question mark. That sounds like it's probably.
It's a really, really good question. So basically, it's all dependent upon the funding date. Okay. So it's August right now, almost September. So if I open my first Roth IRA today and I deposit funds into it today, my 5-year period actually starts on January 1st of 2017. So I basically get a free 8 months. there. Okay. And that doesn't change if I move it from, let's say, Midland IRA. Let's say I open up that Roth IRA with Midland and I move it all over to Fidelity next year. That clock doesn't start over. So in the eyes of the IRS, and this gets a little confusing, you can have 20 different IRAs out there, or 20 different Roth IRAs out there. In the eyes of the IRS, it's only one Roth IRA. Okay, so they don't care if you move it around. Whatever your deposit day was, that's when your clock started.
Right. Okay. That's kind of what I figured. I feel like I might have heard that question once before, so that makes sense.
Yep.
Okay. So another question that came up, and this was a good one, and I actually emailed this person during the presentation to send this question to me directly because I'm not 100% sure on it. But basically, what he's saying is, when you open up a cash account, you get 60/40 tax treatment in futures trades. So 60/40 tax treatment, for those of you who are unfamiliar, means that if you make money, you get 60% of your income taxed at the long-term capital gains rate, which is a lower rate than the short-term rate. So even though all trades are even might be seconds long, you're still getting a tax benefit by trading futures because you get 60/40 tax treatment on gains in futures. But what this gentleman was basically saying is that when you finally withdraw the money X years down the road from the IRA, you're going to be paying. The question is, are you going to be paying income tax on that? So that could be a higher rate than the blended 60/40 rate, because when you make the withdrawal from the IRA, it doesn't matter how you made the money, right? It just matters that you're taking out X amount of dollars, and you're going to be taxed on the current the income tax rates at that time. Is that a correct assumption?
Yeah, that's correct assumption. I mean,
Right.
because when the rules are built, think about it. It'd be really confusing if somebody had was trading, like, let's say 10% of their account in futures, and then 90% of it was in mutual funds.
How could you keep track of it?
Like for 30 years or whatever, that would be pretty much nearly impossible. So,
right.
So yeah, basically they just said when you cash it out, ordinary income tax, it is what it is. And,
right.
Whatever your situation is,
that's what Okay. FM, did that clear up your question from earlier today? That's a good question. I hope it does.
Yeah.
Okay, that's kind of what I figured. Because how on earth would you keep track of that throughout that period? It'd be nearly impossible. That makes sense.
Yeah.
So Robert had a question that he said, I've got an individual account as a professional trader. I earn money in it, and I transfer $53,000 each year into an individual K account with you as a tax deferred each year. So what he's basically saying is, can he form a company and take advantage of that individual K account, or do you know anything about the requirements of how you could form that individual K account?
Yeah. So basically, so he has a trading business. If that's what I'm hearing correctly, and he basically wants to start an individual 401k associated with that business,
right?
To put the money into. Yeah. I'm pretty sure that's a doable option. And then you could do the Roth option as well. I might want to reconfirm that, because trading income is weird with respect to earned income. But if you're doing it out of an entity, it might satisfy those requirements.
Right.
So I'd have to kind of double check on that. But I think it's a doable option.
Right. Okay.
It should be. If you're making money trading, that's a really powerful tool.
Right. Understood. Okay. Yeah. So Robert, sounds like that might be, that an individual consult of some kind might be useful for you. That if things are going well. Good. Okay. Well, yeah, definitely. Well, I'll get in touch with you anyway, and then we'll put you in touch with Midland. If I missed anything, this would be a great time to mention it. Now, does anybody have any questions about the allocation stuff from earlier? Anything related to Infinity specifically? Feel free. Now's a good time to ask. Mike asked, but you do need earned income to do a 401k, correct? Is that right, Brad?
That's correct. You need earned income for any retirement plan.
So you have to pay yourself a salary of some kind.
Yeah.
Right.
Yeah.
Okay. All right. Well, Mike, that answers that, I suppose. Okay, cool. Well, let's leave the floor open for just another minute. If anybody else has any questions, now's the time to ask. And again, most of you folks in here, thanks for coming with us today, are already clients. So we really appreciate that. And we have found that usually people who are interested in this already have an account here. So we're trying to frame this in the discussion of people who already trade here. But if you're new to us, or you just want to talk to us about this process, it's not like we only open accounts in the form of an IRA for people who already have accounts here. We do have people who open IRA accounts with us first because maybe that's where the majority of their money is, or they just prefer that. So if you want to inquire with us about how the process works or are just interested, let us know. It's something we do every day. We're in contact with Midland basically every day, and we're very well versed on the process. All right. There was one other question that came through here from Leo. Brad, he says, Brad, I'm 69 years old. Does a Roth IRA or a regular IRA make sense? So which one would be better for someone in that position, or do you need to know more about that person?
Well, I definitely need to know more, but I'll take a stab at it just for the sake of discussion. If you don't have an IRA account, then the first question I would have would be, are you working? So can you do you qualify to put money into an IRA? Uh-huh. But with a traditional IRA, once you hit 70 and a half, you can't put money into a traditional IRA anymore. So that if you're 69, that makes it a little bit of a struggle. But if you are working and you can establish a Roth IRA, you can contribute to a Roth IRA for as long as you please. There's no cap rate there. So if you're 85 and you're making money, you can contribute to a Roth IRA. So that would probably answer that question, depending on the situation. Yeah,
Leo, that might be a good question to discuss on a one-on-one basis, because these guys are pretty knowledgeable, but everybody's circumstances are a little bit different. Common question we get, Brad, too, and I'm going to tag on to this after you answer it, but can you describe for people what the annual admin fees are for Midland for doing this IRA?
Yeah, it's pretty simple. It's a flat $295 for the administration of the IRA account. That's a flat cost. So because our workload doesn't change whether you have a $5,000 account or $1 million account. Right. So it's a flat $295 a year.
Right. Okay.
And then those fees can be debited from the IRA account itself, or you can pay it out of pocket.
Right.
Doesn't matter which.
And this is something that I want to touch on as well, because a lot of times, for most of you guys and gals who are clients of ours already, how many people here have become desensitized to things like $300 over the course of a year? All right, maybe I'm just jaded, but I am. And so it's kind of funny. It's not to minimize the impact of fees. Like, no one likes to pay fees. And a lot of times people ask me, well, my TD Ameritrade account has no fees for the IRA. So why would I do it with Midland when I have to pay a fee? Well, there are a lot of questions, and you as a customer have to answer those questions, and you as a customer have to decide what is important to you. So there are things that are different about most of you guys who have come from Thinkorswim or other places. You're here for a lot of reasons, not just the margin or the rate, but oftentimes it's for the light feel of the platform and just the experience overall. There are things that are hard to put into an email or a spreadsheet that set us apart from some of our competitors who might offer lower fixed costs for IRA accounts like this. But one good example of how asinine this discussion can get sometimes is this. All right, I made this while I was listening to Brad talk. All right, so this little word pad thing here. So Thinkorswim, not all the time, and this sort of depends on the person we talk to. In general, for indexes, based on what's on their website, most people are paying about $2 more around turn for an E-mini at toss. So usually, and again, we've run across other examples depending on volume, and some people have $10 million there. They might be getting a better deal, but their website says $225 a side or plus exchange fees, which is $688 for a round turn for an E-mini. And most Infinity customers are paying less than that, usually roughly around $2 less, some less. So if you're a toss user and you're doing, let's say, 10 round turns a day, which is 20 contracts. All right, that's $20 in commissions a day difference, times 20 trading days times 12 months is $4,800 a year. But my TD IRA is free. It's crazy. So sometimes you really just have to think about how much business you're actually doing trading. Some people are doing way more than this. If you're only doing one contract a year in futures because all you're doing is hedging your option portfolio, then yeah, maybe this is not the best fit. But for most people, it is a very good fit, despite the presence of an annual cost that is really, in the course of futures trading and in the context of futures trading, it's not a lot of money. It's 30 ticks in, crude oil for a year, and we believe that to be a reasonable cost of doing business for the advantage of having, the setup here that you would get with a regular cash account. So that's just my opinion. Again, I know I'm a little cynical because I've been doing this for 13 years, but I have become desensitized to these types of values. I like when things work. I don't mind paying a little bit as long as it's working the way I want and I feel good about it. And a lot of our clients feel the same way. But if you don't, if the idea of paying like a $300 annual fee like drives you nuts, just consider, the implied costs and some very plainly stated costs, as we just displayed, of using other companies that might not charge that fixed fee. All right, so I just wanted to touch on that because, fees are important. Mike, thanks for the nice comments there. Cool. Brad, do you have anything else you wanted to add, or does that about do it for you?
I think that does it for me.
Okay.
I appreciate again you having us, Midland IRA and myself, and you guys have always been a great shop. You've been very diligent about your process, so I think that's displayed through your success here.
Right.
So,
excellent.
Thanks
cool.
again.
Hey, thank you, Brad. Appreciate it. Everybody, thanks so much for listening. Again, I know it's it's not the sexiest topic, but the allocation stuff's really interesting. A lot of you folks are already familiar with us, so thank you so much for coming to the webinar. And if we missed anything, just shoot a quick email to your rep in our office because we want to get this stuff answered. A lot of you guys are pursuing other accounts with us. We're not going to ignore your questions. Okay, we will definitely get them answered. We want to help you get up to speed. So thank you so much for coming, and then we will get this video rendered and put up on YouTube hopefully in the morning sometime. So take a look at our YouTube channel. If you are not subscribed to our YouTube channel, go to youtube.com, search Infinity Futures, and subscribe. That way, when we do a new video, which we pretty much do every couple of days at the very least, you get a notification on your phone or in your email, and you can see what's new. It's a nice way to keep your finger on the pulse of what we're up to. All right, so thanks again. I'm going to go ahead and read the risk disclaimer one more time and shut the room down. We'll see you next time. Everybody have a great rest of the week, and be careful on Friday. Okay, it's first Friday of the month, NFP. Take care, guys. All right, folks, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. All right, folks, thank you so very much. Have a great night. Bye.